Hello, everyone, and welcome to part two of Building Your Charts. I'm Coach D and Alex, your master trading instructor. We're back with you again. We're going to continue as we taught you in part one when we talked about large time frame. This video is going to be all about the analysis time frame, and we're going to use the format that we told you where we tell you what we're going to teach you, then we're going to teach it, then we're going to tell you what we taught you. And for those of you more advanced traders, as we promised, if you just want to get to the end of it and catch the quick summary, because you do already know all the mechanics and all the language, you can just take a half a moment and then you can zip over there. Alex, how are you tonight?
Pretty good, thank you.
Excellent. Alex, what I'm going to ask you to do is show us what an analysis time frame chart could look like so we can get a glimpse of actually where you'll be taking us on the journey of building this chart.
Okay, let me zoom in. You see
Whoa,
it?
hold on. Alex, before you say a word, everybody, just take a few moments and just let your eyes move around that chart. Some of you are overwhelmed. Others of you, maybe you're asking, what did you get yourself into? So, Alex, this is what you're telling us is the analysis time frame. Is that correct?
Yes.
So, could you at least just tell us what are we seeing here?
Okay, this is a little bit overwhelming, I understand. What we're teaching, we have implemented the wave theory, where we're looking at different type of wave, bullish and bearish.
What does the green box represent?
Green box represent the bullish action.
The pink?
The pink one is a bearish action.
The
If
bullish
it's
is going up, the bearish is going down. And
exactly,
you just said that we want to trade in the direction that it's actually moving.
it's not the direction of the moving, it's the direction of the context of the previous wave. If your wave is bearish and the price was moved historically down, it's create the footprint, it's create the supply and demand, and we're going to teach this in the future. So this one, the top is supply. As soon as you get the supply, you have a market reaction. If it
Okay, hold on. What you're saying is, as we follow the methodology that you're showing us, we are going to know exactly how to interpret what we're looking at. And this feeling of a little taken back with interpreting this, eventually you're going to completely understand exactly what this is. Would you take this down and would
okay,
you please teach us how to build the analysis chart? Just take us from the large time frame where we left off yesterday.
yes, absolutely. I'm going to bring control center right here so
Okay.
everyone could see it. Then we'll create a brand new one. So we're going to go to chart.
Now, it's the exact same step we did with large time frame. Now we're
M
doing
and
it with,
Q. We're going to do very fast. 365. We're going to change to 1. It's the width of the bar. And we're done. It's simple. It's a large time frame.
oh, I see what you did. We only had to build the large one like we did in part one, and we're going to actually build the analysis time frame chart from this chart already.
So this chart, we would like to build all the different time frames on the same screen. So for us, it's easier to switch over between different screens if you have multiple tabs. It's very simple. So first of all, duplicate this chart. So if you click right button, you'll see duplicate in a new tab.
And it just simply made an exact duplicate of that first one.
Absolutely. Yeah, it's that simple. Then the next step is to pick up the right series of the bars. So in this case, instead of days, as we mentioned, we're going to do Renka. Yeah, Ninja
More
Renka.
slowly,
You
we
can
need
see
to make
here.
sure we see where you are. We're going to take this pull down here from day, and then
Mhm.
we're going to go to this option and click on that. And then that's
Mhm.
what's going to appear at the top.
Right. Then for this specific time frame, analysis time frame, we're using 89 and 13. And this depends on the market.
The difference between somebody who wants to trade, say,
Crude
gold
oil.
or crude oil, they may
Mhm.
have different numbers, but these numbers are two essential numbers to change.
And in the future, we're going to discuss it. Number of days, the time frame, usually you need to have the full two swings.
I don't know what you mean by swings, but this is going to be how many days of information and data that we need.
That's correct. And candlestick, it's one. So I'm click apply, and you'll see this beautiful chart. Wow.
So show us the large time frame.
It's easy to switch. You'll see here, this is a large time frame.
And this is July. Look at, oh my goodness, here, look at this. July,
Mhm.
August, September. So each one of these candles represents a day in the month. Okay,
Each candle, 1 day.
a full day. And then when
Full
you
day.
click on this one, if you'll click on that one for us, there's a whole lot more candles on this page. Well, here we are in this particular date when we're making this lesson for you, February 10th, but now we can actually see time increments. So those candles are what is happening at that particular time within the hours. And this is the full analysis chart.
Yeah, this analysis chart without any indicators.
And the indicators are actually the part of where all of the analyzing comes from, correct?
In order to make it easy for everyone, we developed the software which allows you to do analysis automatically. So for example, if you decide define the which wave, bullish, bearish, etc., the software draw it for you.
Okay, so you're going to teach us how to do the AOM trading methodology without having the AOM software that automatically does all of it for us.
Yes.
If
Yeah.
I learn the methodology from you, then I can use Think or Swim or whatever platform that may be available, and I can apply your methodology.
Exactly.
Let me again, I want to continue to have a bit of a conversation with you. So let me ask you, what exactly is your methodology do that is so different from everybody else's?
So this methodology simplify first your thought process. First of all, as we used to say in real estate, location, location, location. So if you find the right location, so it's very forgiving to put the trade on.
Let me take it from a different perspective, Alex. There are two types of people who are in the world of trading: market maker traders and independent traders.
It's quite simple. So the regular retail trader, for example, we made this move, and the regular trader says, okay, now we made the move, now we're going to join the crowd. At this point, they join the crowd, and suddenly they have a pullback. It's below this point. So most of the people put the stops right here, and they've been stopped out. As soon as they stopped out, the market continue goes higher. Look at this one, the same things. Market maker doing this on purpose. If you join this crowd, market moving up, you join, you think it's going to higher, boom, you take your money and moving higher. So, and they get to the point to the top. Let me expand this one box. So what do you think would happen? This is a stop, they lose money. We said, okay, it's a bullish move. Let me change this one color to make it green. Just make sure, don't forget it. This is bullish. So in our terminology, we say, okay, this become our pivot. This is a pivot point. They have a big swing up. Let's assume this is a pivot point. If you hit the pivot point, you're looking for opportunity for the new wave. You're looking for the new wave to make a new high. It's very simple. You have some demand here. You can reverse on that part, or even, you're trying to make new high. This your reversal point. It's maybe new wave. We don't know. If you break this pivot point, that's it. This wave is finished, and we're just looking for the new wave. And this is a sweet spot we're trying to find.
Okay.
Find the new wave.
Hold your horses here. First of all, let me go back to the beginning of the box over here on the left-hand side. I would like to understand the analysis chart only from the standpoint of my question. My question is, what makes yours better than anyone else's? And here's what I think I heard you say. Number one, the market makers intentionally know when you're going to think you know what the market is doing. When it was way up here at the top, they will intentionally get it back here and bust your trade. And then they continue to just keep moving up. And when they know there's enough people in there, they back it up, take all of these people's money, take it out, and then they keep moving back up. There is a tug of war going on. And on one side of the rope is large, giant institutions that on the other side of the rope are all of the retail traders, people that are just sitting at our computers at home, and they're coming in and eating us like sharks.
Yeah. If you look at the small guys versus big institutions need some fuel. If the big institution want to buy, somebody need to sell. If the institution need to sell, somebody need to buy.
And so they manipulate the
market.
The market looks like,
yeah,
in order to convince these small investors what they think it's going to do, so that they can then consume their money.
Exactly. For example, from this point, what's happened?
Okay.
The most of the people short the market, right?
Okay.
In our methodology, we're looking for the long market. Let me step back, and for the sake of conversation, I'm going to show you this chart. And this is the next wave. This is a wave. This is a pivot. Let me draw this one. Okay. So below this point, we're looking for demand. And all of the things, this demand, anything can be demand. So we'll take this one, the first low. Just bear with me 1 minute and I'll be done. This one, the whole this will cover up. And what we do is we define the location, we call location real estate.
I want to be sure that I continue to clarify this one major point. The market moves up and the market makers get everybody to think, oh, this is good. I got to get in on this. I got to make money. And then they pull it back far enough so that in this particular area, they can actually capture everybody's money there, get them out of the trade. They feel like they lost their money. And then
basically distribution phase. This
and
accumulation
phase. Continue to take this and move it up again and again, doing it all along the way. There is not a single program in the entire investment industry yet today that we know of that's about to tell you or can tell you what I'm leading up to. So get ready. Here it comes. All of the programs that are on the market are designed to teach you how you can be involved in this part of the trade, or this part of the trade, or this part of the trade. But in reality, the market is made up of the market makers, the major institutions that are setting up the market for this moment here, for this moment here, for this moment here, where they just eat up all the people who are thinking, oh, this is a train ride, I'm going to get on it. The difference of what the AOM trading methodology is, whether you let us teach you the manual methodology so you can use it on another platform, or you use it in the NinjaTrader platform where we have the automated working indicators for you. When everyone else is going long and the institutions know they're getting ready to go short, we know we're getting ready to go short. And when the institution is getting ready to go short and they got everybody believing, okay, we're going to go short, and they're planning to go long, we know exactly how to see when they're planning to go long. And that's why Alex and our accounts could be making 60 to 80 to 90% returns on our decision making.
Yeah, you capture, pretty right. That's very good. One thing what's happened is the market, specifically how big institutions making money, right? They can't wait, 2 years, etc. Put some money on and wait. That's not what they're doing. They accumulate the money, then they distribute, start selling. To whom? To us, to small guys, and then they profited here at this point. Then they use this money to make another swing, then take the profit, make another swing, take a profit, make another swing, take a profit. This is the account, growing very fast because they manage this market, they manipulate this market.
Okay, so then now that I've made the case and you validated that your methodology is very specific to how institutions think and trade, can you please take a moment? You have seen virtually every trading program that's in the industry, have you not?
Oh yeah, I saw lots of program, and I've been lots of paid classes in the
How many
past.
years have you been in trading?
Probably 15 years. Yeah.
You've seen,
Active trading. Yeah.
have you seen any other programs that actually, or the classes that actually teach and do the methodology the
I can
way
tell
you
you,
do?
I saw lots of classes, pretty good classes, and very good teachers. They teach, specific things. For example, if they teach you supply and demand, they teach you most of the time without the context. So then it's up to you how you define which zone is good, which is zone is bad, etc. Because you'll see lots of zone. You can right now can throw quick um, example. If I add some demand zone, aggressive demand zone, so and conservative zone, everything would possibly I could.
This is back to what we looked at when you showed us
Right,
in the beginning, what a
right,
chart could look like once we really turn it on.
yeah. And dilemma is, how are you going to select which one is good is which is one is bad? The system designed such a way so it's make this decision for us. We don't need to think about it. If it says red, you'll see the border in red. So this conservative. So this more likelihood to have some reversal in this area. Anyway, so this who teaching this kind of thing without the context. So what we're applying is holistic approach. From the top down, you'll see what's happening. Like you zoom in, you look from the 3,000 feet, 30,000 feet, and you'll see, the Earth in the blurry. Then you come closer, close, and finally you look at magnifying glass. You see, oh, now I see. Now I'm going to land here. This is what we're doing. This is what the software does, and this our methodology does.
So what you said basically is the analysis time frame gets me so much closer. So now I can begin to actually see a landing area, more specifically the area I want to trade in, like this. Okay, so
Location. We'll see
let's
location, but we don't see the house yet.
okay. I'm okay with that. We don't see the mailbox. We're going to put the letter in because we're not delivering the mail on that street. That would become our execution. So let's go ahead and do a summary of what you taught us. How do you set up the analysis time frame chart? So what we did, everyone, is we connected our large time frame to building our analysis time frame. And Alex showed us step by step exactly how we set that up. And then we looked at a lot of information that had to do with exactly why the AOM trading methodology is unique. It teaches exactly how the institutional trading decision making gets done, as opposed to the independent retail home traders like most everybody else. And then we saw how the analysis chart can blow up with all of the different indicators that eventually we're going to learn exactly what they are, so that we're not just jumping in when it's a little too late and we wind up buying when it's high, selling when it's low, instead of selling when it's high and buying when it's low because we were following the wrong direction. So in the summary now, Alex, teach the advanced traders exactly how you set up a analysis chart.
Okay, sure. So you see the tab on the bottom. So click right button and click on duplicate in a new tab.
Okay.
Yeah, right click. Then you see exactly the same chart. So what you need to change the data type. If you click on the data series right here, you're going to see a new window. In this one, you can see the same number of days, but it's too much for this type of chart. So usually it would take 30 days. Instead of days on the type, different type, we use Ninja Ranker. If you go to the bottom, you'll see Ninja Ranker. And you need to change parameters. For this specific market, M and Q, so we're using 89. It's a break size. We use 13 for trend threshold. Okay, these are two numbers. That's all you need. And candlestick width, we're using 1. That's it. Click apply, click OK, and this is done.
Now we have the first two of the three charts that we're going to build that becomes our operating workspace. Now, for the next program that will be coming up for part 3, we're going to show you exactly how to build the execution chart, which is where we officially narrow in and then execute the trade we want to make. And that will become then the completion of our operating workspace. Alex, thank you so much for all the extra detail you added into the general conversation we had. Thanks for showing us how detailed the charts can get. That provides us with so much analysis information, but more importantly, the difference between why this AOM trading methodology is so different than every other program and class that's out there teaching, because this targets the methodology of institution trading as opposed to independent retail trading. Thank you very much, Alex, for all you've given us today.
Sure, absolutely. You're
Everyone,
welcome.
we'll see you on the next video and we'll progress from there.